to EDU-Tutor. Today we want to look at the cash book, and in this video we're going to be looking at the two-column cash book. In the video that follows, we will have the three-column cash book. So what is a cash book? A cash book can be referred to as a book of original entry or a journal that is used to record cash and bank transactions, right? And it is the only book of original entry that also looks like a ledger because it carries a debit side and it also carries a credit side. Now, the cash book represents both the cash and the bank account. Therefore, we have two columns on both the debit and the credit side, one for the cash and one for the bank. Now, that is a two-column cash book. If an item increases the amount of cash that the business has in the business, then we're going to put that item on the debit side. In other words, if we're getting or receiving money, that is going to increase the amount of money that we have in the business, so we put it on the debit side. Meanwhile, we put all items that will decrease our cash or our bank account on our credit side. Therefore, if we're making a payment, it is going to go on our credit side. This is how we would usually lay out our two-column cash book. We have date, details, folio, cash and bank on each side. So up to this point, it would be our debit. And then over this side would be our credit side. So let us go ahead and practice one. Before we go on to practicing one, this is a key term that we want you to look at: contra entry. Now, what is contra entry? Contra entry refers to any transaction that involves only two accounts, which are the cash and the bank account. In other words, any entry that affects both the cash and the bank account would be referred to as contra entry. One will be debited and one will be credited. We use a C, a capital C, to refer to or to show that that transaction is a contra entry, and we put it in the folio column. So let us practice that. We have a two-column cash book question here. So a two-column cash book is to be written up from the following carrying balances down to the following month, and we are in the year of 2017. So we're going to go ahead and prepare our cash book with our date, details, folio, and cash on the debit side, and then date, detail, folio, cash, bank on the credit side. So that is 5 columns on both sides. We're also going to indicate the year that we're working with, 2017, as the question would have indicated, and it's always good to put your dollar signs. Now remember that your folio, when it comes on to journals, your folio would be the ledger that you will find that transaction in. We have 3 ledgers. We have our purchases ledger, our sales ledger, and our general ledger. Purchases ledger is for purchases made on credit. Sales ledger is for sales made on credit. And general ledger is for every other transaction. So you can't get that wrong, right? So January 1, we started a business with $4,000 in the bank. When you start the business, you know that that is referring to capital. And they put $4,000 in the bank. Now, would that $4,000 increase your bank account or would it decrease your bank account? It would increase, because if you had $0 in your bank account, now you're going to have $4,000. So what we're going to do, since it's increasing your bank account, we know that we debit. Any increase to cash or bank will go on the debit side of your cash book. So our details is going to be capital, because that is the other account that is being affected. It is the 1st of January. And our folio is going to be general ledger, because it's neither a credit sale or a credit purchase, and $4,000 to your bank account. So that is the transaction recorded. Capital for details, general ledger for folio, $4,000 in the bank on the 1st of January. Moving right ahead or along, January 2 paid for fixtures by check, $600. Now, we're making a payment. That means it's going to decrease our account because we're spending some of our money. Whenever we find a transaction that is going to decrease our account, we put it on the credit side. So we go on our credit side for the 2nd of January. We're going to show that it's going to decrease our bank account for $600. The details is going to be the other account that is being affected, and that is fixtures. And again, general ledger. The 4th of January, cash sales of $225. Now, when you make a sale, you will receive money. So they're saying that you made some sales and you received cash for it. Now, would that increase your cash balance or decrease your cash balance? It would increase. So we're going to say January 4, we did some sales for $400, and because it's not credit sales, we can find them in our general ledger. It's $225 for cash. On the 5th of January, paid rent by cash, $140. Now we're making a payment. We always say that anytime you're making a payment, Cashbook will decrease. So it goes on our credit side. So January 5, rent, $140, and it's a general ledger. January 6, T Farmers paid us by check, $188. So we have T Farmers making a payment to us. Would that increase your money or decrease your money in your bank account? It would increase because that person is the one making the payment to us. Alright, so we're receiving some money. So we're going to say January 6th. Now, in a case like this, you need to record the person who's making the payment. So the transaction will go into that person's account. Now, in a case like this, we record T Farmers as sales ledger because we're saying that that person previously owed us for something and now they're making a payment of $188 in our bank account. Remember that a sales ledger is for sales you made on credit. So in this case, we're assuming that T Farmers is a debtor or an accounts receivable, and therefore we record him in our sales ledger. January 8th, cash sales paid directly into the bank, $308. So again, we're receiving money for sales, so we know it goes on our debit side. January 8th. And it's the general ledger because it wasn't on credit. January 10, J. Khalil paid us in cash $300. We're getting money again because this person is making a payment to us. So we're just going to record that. January 10, J. Khalil $300 in cash. General ledger because it's not in credit. Now, January 12th, paid wages in cash, $275. we're the ones making the payment. So once we're the ones making the payment, it's going to decrease our cash account. So January 12, wages $275. Again, it's a general ledger. January 14, J. Walters lent us $500 paid by check. So, are we receiving money in this case or are we making a payment? We're receiving money from J. Walters. So, all we're going to do is to show that our bank account is increasing. Where do we put our transaction when our bank account is increasing? We'll put it on our debit side. Great. So we're going to go on our debit side and enter this transaction. So it's going to be $500 under the bank from J. Walters. And the date was 14th of January. General ledger. January 15, we withdrew $200 from the bank for business use. No. How would you record this transaction? The first thing is that you took $200 from the bank account. Would that decrease your account or would it increase your bank account? It would decrease your bank account. You're going on the credit side. You're going to say cash. So you took $200 from the bank. So obviously you're going to be getting cash for that. And it's going to go in your general ledger, $200 under the bank account. Now, there's one more thing to this transaction that I want you to pay attention to. They said that we took the money out of the business for business use. So now that we withdrew money and we got it in cash, we still have that cash. So we have to show that the business has that cash. What we have to do is to increase our cash account. So we go to our cash account and on the 15th, we're going to make note that we received some cash. So we received it from the bank, $200. Now you will notice that this transaction affects both the debit and the credit side. So what we have to make note is that it is a contra entry. And we previously spoke about what a contra entry is. We said that a contra entry affects both the debit and the credit side of the cash book, or it affects both the cash and the bank account. Alright? January 20, we bought stationery paying by cash, $60. So we're buying some stationery and we're paying for it. Would that decrease our cash account? Yes. So we're going to put it on the credit side to show that our cash account is decreasing. So we go ahead and we go to January 20, stationery, general ledger, and the amount was $60. $60 cash. January 22, we pay J Fund by check $166. Again, we're making a payment. So we're just going to make note of that. Whenever we're making a payment, it goes on our credit side to show that our cash account or our bank account is decreasing. So January 22, J Fund $166 under the check account. Now, who do you think J Fund is? J fund could be a supplier or an account payable. So therefore, we can go ahead and record his transaction in the purchases ledger. And we had 166. Now January 28th, cash drawing of $100. So we're taking some money out of the business using cash. Now, which side would you put this transaction on? Would that decrease your cash account or would it increase your cash account? It would decrease. So we put it on the credit side. So January 28th, it's drawings of cash $100. Now that is going into your general ledger because it's neither a accounts payable or an accounts receivable. Now the owner is the person taking that money out of the business for his personal use. That is why we refer to it as drawings. January 30, J. Scott paid us by check $277. Now we have to make note that the money is coming into the business because J. Scott is the one making the payment. So we're going to go ahead and put it on our debit side because we're showing that the money in our business will be increasing. Now, who do you think J. Scott is? Will he be an accounts receivable or an accounts payable? A receivable. So we find him in our sales ledger and it is $277. Check. So put it onto the bank account. Now 31 of January, cash sales of $66. So we received some cash for sales. So we're going to go under the cash account, put our $66 on the 31st of January for sales, and that's the general ledger. Now that we have completed the list of transactions, we're not yet finished. We have to balance our account. So just like when you were doing ledgers and you had to balance your account, we have to do the same here. Now you can pause the video and try to balance the account. Work with your cash account first. So you would work with this side and this side first. Now, what I want you to do is to pause the video and add up your cash column. So both your debit side and your credit side. All right. So your debit side would come to 791. Your credit side, let me just highlight them so that you know where we're working with. Now your credit side will come to 575. All right. So now we need to find the difference between our credit side and our debit side. So we're going to have 791 minus 575. So we get 216. Now you know from doing ledgers that your difference will go on the side with the smaller amount. So since we got 575 for our credit side, we know that that is the smaller side. So we're going to put our difference on the side with the smaller side. So we call that balance CD. 261, 216. That is the difference. Now that we have worked with our cash account, we're going to go ahead and work with our bank account. So we're going to work with our bank account. So I highlighted the bank account, that is where we are at now. Alright, so add up your bank account and tell me what do you get for the bank column. So both your debit and your credit side. So you can pause the video and add. Alright, so I got 5,273 for my bank column, which is this column. And for my credit column, I got $966. So again, which side has a smaller amount? That is your credit side. So your balance CD will go on the side with a smaller amount. So we're going to say 5,273 minus 966. That's 5,273 minus 966. We get 4,307. That will go on your credit side, which is a side with a smaller amount. So if your debit side had a smaller amount, it would go on the debit side. But in this case, both your cash and your bank account had the smaller amount on the credit side, and that would be good for the business. All right, so that would be your first step in balancing off your cash book. Now that we have found our balance CDs, we need to go ahead and total these columns. So we just previously worked out the totals for each side. So you know the totals for your debit side. So let us work with Cashbook first. You would have said that your total was 791. Now I want you to pause the video and put these amounts in your calculator. Now if you don't get this back, then something is wrong. So you should get 791. So both totals should be the same. Now for bank, you would have said that your total was 5,273. Now confirm that that is what you get for your credit side. So you can pause the video and check. You should get 5,273. So that means that our cash book here, we balance it off here. So they're the same. Alright, now the last step is to bring your balance CD to the opposite side for the next month. We're going to say the 1st of February. They're going to start the month. So balance bar forward will be 216 for cash and 4,307 for bank. Alright, and that would be your cash book. So to revise what we spoke about what a cash book is. We said that the cash book is a type of book of original entry or journal where we record cash and bank transactions. We said that on our debit side, we put all transactions that are going to increase either your cash or your bank account. While on your credit side, we put any transaction that is going to decrease your cash or your bank account. Alright, we also spoke about contra entry. We said that a contra entry will affect your bank and your cash account. One will be debited and one will be credited. We also spoke about folio, and we said for the cash book, you're going to be using your sales ledger, your purchases ledger, and your general ledger, which are the three types of ledgers. Purchases ledger is for any accounts payable. So, purchases that you got on credit. Sales ledger is for any accounts receivable, which is sales on credit. And then your general ledger is for every other transaction. Alright, so thank you for watching. Hope you enjoyed this video, and I will see you another time. Bye.